E-mini S&Ps close out the day and the week higher. Today we saw E-minis go out at about 56.30. That's up about 0.5% on the day, but we saw them go out bigger. We saw them going out about 4% on the week, reversing almost all of last week's losses. So the prior week we saw a big down week. This week we saw a big up week. In fact, we were up every day this week in E-minis. All of this really revolving around what the Fed could do next week. How aggressive will their rate cut be? Well, at some points during this week, we saw rate cut odds for a 50 basis point cut go as low as 10%, but they're going out this week ahead of the weekend at about 50%. So still a lot going on. Former New York Federal Reserve Bank President Dudley had put out an article overnight that suggested the Fed should or could go 50 basis points next week. Obviously, all this will be resolved on Wednesday when the Fed does meet and does cut or doesn't, depending on how they feel. But ultimately, this will all find its way on Wednesday, and E-minis tracking higher for all of the week, closing out much higher, up 4% from last Friday's close at 56.30. Now, what does this mean for volatility? Well, as we've talked about, volatility moves inversely to the indices. So as we saw volatility going out relatively high, highest we'd seen on a weekly basis in a month last Friday, things were lower this week as the indices were rallying, despite the fact that we do have FOMC lurking next week. Lastly, let's talk about what we do have next week. Next week, we do get some data. We have retail sales. We have housing data. We'll get some earnings. One key will be FedEx. But ultimately, the market's going to be waiting and watching for, yes, FOMC and the post-FOMC press conference when we'll hear directly from the Fed chair. So after a busy week with data, we saw stocks moving higher from Monday to Friday each day, closing out the week at 56.30, up 4% on the week ahead of next week's retail sales, housing, and FOMC.